course, one stock continues to be the top story in the market. That is Coinbase, company making its debut yesterday in a direct listing on the NASDAQ. Stock traded up into the low 400s here. We see ahead of the opening bell, it's in the mid 300s, up about 4%, 5% at last check. Let's bring in Yahoo Finance's Jared Blikre to talk a little bit more about what we've seen in Coinbase, Jared, because if we look at the chart on Yahoo Finance, we're referencing that $250 reference point. But I mean, net from where Coinbase started trading, it was down during yesterday's trading session and sold off pretty steadily through the afternoon.
Coinbase up 6% in the pre-market. But yeah, you take a look at yesterday's price action, very, very volatile. And one thing I've noticed about these direct listings is they tend to have these very volatile first days. And maybe it's just the nature of the beast. This was a huge offering, but 27% high peak to valley here. That is a huge amount. And if I were to draw the VWAP, that's volume weighted average price, it looks something like this. So until price is able to get above this line right here, I'm still thinking that sellers are in control. And basically, this was a seller's event. This was a liquidity event for the shareholders to get out of the stock, Myles.
All right, and there we see live pictures from the floor of the New York Stock Exchange on this Thursday morning. Align Health ringing the bell down on the floor as we get Thursday's trading session underway. And, Jared, just to kind of circle back to Coinbase and wrap that up before we move into kind of what's happening within today's session. You mentioned it's a liquidity event. We saw that pop relative to that reference point of 250, but the average price that Coinbase had sold at in the secondary market ahead of its public listing was about $343 per share. And if we look at where the stock is trading this morning and where it ended up trading yesterday, it was about at that 343 level. And so I guess the question is, though it is new to the public markets, in some ways, there was already a pretty good liquid market in Coinbase, and we're not really doing as much price discovery, perhaps, as you would see in a traditional IPO or even a traditional direct listing.
Yeah, I'm going to get really big picture here because I think this is kind of a symptom of the last decade of ultra low interest rates. And this is something we've talked about a few times. You have these persistently low interest rates. This really benefits people who need to raise money in the capital markets, either through selling stock, through debt. But it allows these companies to remain private for a lot longer than they would have been able to be profitable, to exist without coming into the public markets before. So you take 20 years ago, 30 years ago, companies couldn't borrow at ultra low rates, and you wouldn't have an Uber that takes a decade to come to market or a Coinbase that takes 7 or 8 years. So I think this is a structural issue, and rising interest rates are going to change that. But for the time being, these direct listings, these companies that are old and profitable and huge, I just think this is a liquidity event. And so people needed to sell. They didn't need to raise more money, but insiders are selling right now. And that's what we're seeing. Now, it is up about, 3-4% right now in the pre-market. Interesting that you brought up that $340 discussion, because guess what? It's at $340 right now. So it really hasn't moved this year if you think about it.